The world's richest people are changing how they invest, from an old country club model to a much more hands-on and diversified model today. I'm going to tell you how to invest like the top 1/100th of a percent, not as some sort of secrets of the rich voodoo, but actual legal structures and actual strategies that successful people are using to diversify their wealth. I recently saw Ray Dalio talked about how he opened a family office in Singapore because he believed in their relatively hands-off, laissez-faire approach to running the economy. He said it was really the only place outside of where he lives in the United States that he wanted to base some of his wealth. And he said that Singapore was eager to attract people like him because, unlike many countries, they actually want capital and they treat it well. That's what go where you're treated best means. If you have money, whatever amount that may be, you want to put it somewhere where it's respected. And for Ray Dalio, Singapore was that place. I've been reading more about this, including an article in The Economist recently that discussed a trend of the uber rich creating more of their own family offices to cut out things like stuffy Swiss banks. And as I've been telling you for years, I think that the idea of private banking is often overrated. Sounds nice, sounds aspirational for a lot of new money clients that we've worked with. And for myself at one point, the idea was I want to have a Swiss bank. And then you realize you pay a lot of fees, you answer a lot of their questions. All banks have questions, but you're basically going to work for them. It's really hard to ever just nail things down with a Swiss bank. Most of them. And ultimately, they propose some pretty vanilla stuff. They don't really have the tax advice on a global scale that they claim they do. It's hard to even get your banker on the phone, and for that, you pay a lot higher fee. And so what I've said for years is a country like Singapore has been disruptive in terms of offering priority banking services that offer access to a lot of the same investments, a bit more of a self-serve model for certain clients who want to serve themselves with much, much, much lower fees and a lot less of the stuffiness. And what I'll see when I go and visit my bank in Singapore is they literally have on the wall talking about how wealth management has changed. It's not about country clubs. It's not about that old guard. Today's uber rich, as The Economist said, want to manage their own money. This is one thing that, I've tried to base Nomad Capitalist around. We help our clients figure out where things actually are today. Swiss banks can work sometimes for having an offshore trust. They can be the bank for that. But for the average person who just wants to have control over their money and they actually want their money working for them, I don't really think that those private banks add a lot. And I think more and more uber rich people are realizing that. And so today I'm going to give you a few simple steps that you can follow if you are just starting out or if you've accumulated a certain amount of wealth. One thing that I see, again, working with clients, almost none of whom inherited their money, is that even people who might have 10 or 20 or $50 million, they've been working their entire lives to accumulate that money. And they might still have that illusion that, okay, once I have some free time, I'm going to work with Nomad Capitalist. They'll open me bank accounts. Hey, let's go to Switzerland. I'm not saying we never open Swiss bank accounts for people. What I'm saying is even some successful people who are in the 1% or a fraction of the 1%. If you have $30 million, you're in the top roughly 600,000 wealthiest people in the world. Some of those people aren't, paying attention to their finances in the same way someone from an older money background would. And what we're seeing is, again, the uber rich are moving to things like offshore banking. So let's start there. If you open offshore bank accounts around the world, you've got, basic transactional retail accounts. This is what we talk about in countries like Georgia, in Ecuador, in Cambodia. These are places to park small amounts of money. Now, even the banks in Georgia now have opened up some investment features. I've got some of my colleagues. I did a training for them. I said, hey, you should start investing in just basic index funds. And so they can go on their Bank of Georgia, they can go on their TBC, they can buy index funds through that very easily. That's designed for someone locally who has a local bank account, doesn't want to go through the hassle of opening a brokerage account. And so more and more countries are getting access to do that. But those accounts are still relatively retail accounts. If you go offshore, let's take Singapore as an example. Singapore, key financial hub in Asia, they have access to equity markets that you'd have a hard time finding somewhere else. If I look at my main brokerage account, where I can invest in tons of countries all around the world, of course, the US and Europe and Australia and Singapore and Hong Kong, but also Mexico and Sweden and a handful, I think Brazil is in there. What are the markets that I can't access? Well, a lot of the markets in Southeast Asia, which is one area where I see a ton of growth. If you're living in the Western world, let's say the United States, you may not see all the growth that's going on in places in Southeast and East and Central Asia, but there is a ton of interest coming into these areas. But in my brokerage account, I can't access Malaysian stocks, I can't access Thai stocks, I can't access Indonesian stocks, and I can't access Indian stocks unless I'm a resident of India, which I'm not. And so by having an offshore bank account in Singapore, I have the retail component where if I want to hold cash, I want to have fixed deposits, I want to make transactions, I can do that. I recently sent some money out of a Singapore account to Europe to pay for a property. But I can also have an investment angle. The bank can help me with that if I want to, and I can get some of that kind of Swiss banking service minus the stuffiness, still keeping some of the bankerness where they kind of make the kinds of decisions that a banker would make, and you may like or not like that. But if I want to manage my own money, what do I have? I have some of my most successful investments by country. Done very well in India. So they have various funds in India, and they can also give you access to certain equities. They have funds in Indonesia. That's done pretty well for me over the years. Not quite as well in the last 6 months, but still doing very well as some equities. Same thing in Malaysia. One thing you can also do, by the way, if you have an offshore bank account with a bank that has branches around the region, is let's say you get an account in Singapore as a priority customer. If that bank has a bank in, let's say, Malaysia, you can go to Malaysia and potentially even get greater access to Malaysian equities. What's interesting is we talk about having residence permits and citizenships. If you get a residence permit in, let's say, Malaysia or Thailand, which you might be able to get by just depositing a couple $100,000 in the bank, that bank, if it's an international bank, if you're a priority customer, right? If you go to Malaysia, you get the M2H residence, you're going to put in about $225,000 at today's prices. They are doing different versions of the MM2H now, but let's just take the 1 million ringgit level, 225,000. You're well into the territory of being a priority customer for them. That means they can then, for some of the banks, refer you out to other banks that they have. And that could include Singapore. So as Singapore becomes more restrictive in terms of opening accounts, having an account somewhere else in Southeast Asia with a bank that's either Singaporean or where they have a branch in Singapore can refer you there, is opening up opportunities. And so you have banking perhaps in a local market where you want to invest. And so that could be Malaysia, like Thailand's stock market. It's really gotten beaten up in the last year. It's been one of the laggards in Asia. So if you wanted to come in and invest in that, you could theoretically in some countries invest in equities as part of the residence permit. Hong Kong's talking about bringing back its residence program in exchange for investments in things like Hong Kong equities. So that's one way to put those two together. So for me, being diversified, and for me, certainly what I'm hearing from everyone that I meet, we get calls from people who are, everyone from $1 million up to multi-billionaires. And the higher up the wealth levels you go, people really want to have multiple passports. They want unique passports. They want unique residences. They want homes around the world. I've met more people with, $100 million and more who are saying, this is really clicking in my head in the last couple of years. I can't just be in one country. I need to be diversified. And so the uber rich are basically doing a larger version of get a bank somewhere, get referred within that bank's network, make different equity investments that allow you to invest in those local markets, and you have access to greater intelligence. Because if you just go to the U.S. stock market and buy the Vietnam ETF, you're not getting the depth necessarily that you would get by investing in a local market. And that's why a lot of those ETFs, if you talk to my investor friends around Asia, they're just not that impressive. Because it's kind of just watered down for the masses overseas. Okay, I want some Vietnam exposure, but you're missing out on some of the better stuff that you can get if you are local. And some of those banks may also have access to private equity deals, depending on the level that you're at. That might be at a 7-figure level. You can generally get into a bank in Singapore in the couple 100,000 level. And so you can go to regions around the world. You can find what is the hub. I can't particularly say I'm impressed by banks in Dubai. I don't think they're at the level yet, but I think that they're trying to do some version of that, within the region. Saudi Arabia is a PR program. I think their banks have some opportunity. So whatever area you're interested in, for me, what the wealthy are increasingly doing, and I'll just tell you what I had a gentleman who his company went public. He's probably got $400 or $500 million. He said, I would like to have 4 or 5 key banks kind of in every part around the world. In Latin America, the financial hub may be Miami. And so you might be in the United States and you kind of are limited to what they offer. But obviously, at a certain level, they're going to offer some products around Latin America. Most banks offer some products in Latin America. Where are you going to go in Europe? There's a number of different places. One of them is indeed Switzerland. There are a few kind of more retail-friendly, less stuffy banks. But you've also got, other asset hubs kind of emerging around Europe. Dubai, Saudi Arabia is trying to kind of come up. I mean, there's different places. I mean, if you go down to, I can't say I'm blown away by Mauritius banks, for example, but they're going to have access to certain things, sometimes in India, for example. So you want to have a couple of different major banks. You notice what the guy said. He didn't mention he wants to bank in Georgia or Albania or Ecuador to get a little residence permit. He only wants banks for the purpose of putting in large sums of money in and being able to invest with greater access and greater intelligence within that region. And so, when my Malaysian bankers say, hey, you have a little bit of extra cash, we can sell you, an index fund in the U.S., I don't want to have cash in Malaysia to invest in the U.S. I can do so more affordably somewhere else. If I have cash in Malaysia and I'm going to invest that overage from what I'm required to keep as a resident, I'm going to invest that in something local, or I'm going to spend it, or I'm going to move it out. And so that's the first thing you can do is you can look at offshore banking to diversify access to investments around the world. And of course, once you're in, I get calls from bankers, hey, we're doing this. Do you want to come over and have a meeting? The people that you meet sometimes when you go to these bank functions, not even the bankers are the ones that you want to meet, but there's other interesting people who are at the level. It's just another conduit. An attorney might be the same way, although I don't know that attorneys host as many cocktail parties. If you're in the bank's family, they will occasionally invite you to come to different events. The second thing that you want to do is you want to look at the structure that you're investing in. And so if you have $100 million or more, you might want to start a family office. However, if you have $1 million, you could look at something like a trust structure. The Cook Islands is widely regarded as the most sophisticated and bulletproof offshore trust structure. There are more affordable options like the Bahamas. For certain Europeans, foundations may be an option. My philosophy generally is if you're going through all this effort to diversify yourself, why don't you consider at least spending part of your time out of your country? And if you can remove yourself as a tax resident of your country, it's going to make this entire structure a lot easier because some of these countries have much lower tax rates than where you're living. And so if you have low tax rates in some of the countries where you're investing, but you live in the US or in Canada, depending on your structure, they may just charge you the additional amount of tax. Okay, you paid 10, we'll take the extra 30. Worth considering moving to a more tax-friendly jurisdiction to let everything be taxed at its appropriate rate, and you'll be able to grow your money a lot faster. So if you're not at the family office level, where Singapore is really courting those kinds of people right now, look at some kind of offshore trust. For me, if I'm going to be investing internationally, I want to have an international trust. Now, if you live in the United States, for example, there's paperwork that has to be filed every year for that offshore trust. Anything you do offshore in the United States, and there's other countries too, there's paperwork to be filed. I suggest you do all this, keep everything above board. You're not trying to hide anything. And if you don't like that reporting, then you can decide to leave the U.S. tax system at some point. But if I'm going to have international assets, I don't really want to put those, just my personal opinion, in a domestic trust where the country that I'm trying to diversify away from still has some kind of control over those assets. And so you can use the structure to buy the stuff to get the kind of billionaires level of diversification. You can own in many countries land. So, Peter Thiel, for example, went and bought up land in New Zealand, was given New Zealand citizenship. Obviously, making investments in other countries could lead towards citizenships or could lead to residence permits, which might eventually become a citizenship. But you can buy things like land often either in a foreign trust, or you can set up some kind of holding company that's within the trust and own that. And so that's kind of the strategy that people might use. One thing you could do is set up some kind of investment company or some investing holding company in a territorial tax or a zero tax or low tax jurisdiction. The UAE, for example, has made some changes to their free zone companies. There are certain activities that will still be at 0%. Things like stocks and shares could be in there. Panama, set up a company, you can get residence. The UAE, Cayman Islands. Find a tax-neutral, tax-friendly jurisdiction, perhaps to set up that holding company that then gives you a residence permit. In some of those jurisdictions, it can be more paperwork. If that holding company is not owned by you, but is owned by a trust, it's possible to set it up and own it yourself and then contribute it later. We've seen that. Obviously, with our clients, we work with all of our different professionals, attorneys and experts and all that. And, we can make the case in some countries that, hey, okay, hey, he owns the trust. Here's the paperwork. We handle the paperwork. But a trust combined with some kind of holding company in a jurisdiction, whereas a trust is generally not going to give you residence permits, the investment company, the hold company could in some cases. And so if you then use that residence as a place to live, let's say you want to live in Dubai, you want to live in the Cayman Islands, you want to live in Panama, you want to live in some tax-friendly place, that will also help you, again, reduce that tax that we talked about earlier and be able to plow more of your money from perhaps more tax favorable investments around the world in countries like Singapore back into to be invested. So if you're looking at private banking, the deals you're going to get from them are generally not that great. In emerging markets, deals are done on the ground. I mean, I'll tell you a story of our friend Reed in InvestAsian. They do real estate deals in Cambodia. He said he bought a building, and I'm paraphrasing the numbers. I think that the people wanted 800,000, and he offered them like 250,000, which in some Asian economies is how it's supposed to work. I mean, a Westerner comes in and says, "Let's offer 750." That's probably like a good deal, right? Like they won't be offended. And I think that they ultimately settled like 300 grand or something. I think I remember the story correctly. I think when you deal with some of the stuffier organizations, they're not necessarily working like that. In the emerging markets, where we're seeing much more uber-rich interest in, and frontier markets as well, you've got to be on the ground. That's why I've traveled to all these different places, because whatever you're hearing on Wall Street is really not the accurate picture. Some of those funds, they have people and they go to Africa, they go to Vietnam, they go to whatever. But you really have to be on the ground all the time doing deals. You're not looking for deals that get sent out to these offshore newsletters where you buy some guy's tomato farm in Kathmandu and they send you a bunch of income. You're not looking for stuff like that. What you're looking for is a network of not stuffy banks around the world, a proper legal structure, and connections that can help you find access to deals so that the real estate deals can go in some kind of holdco or trust structure. Equities obviously can be held through a bank. Certainly for some of the markets that you might want to invest in, standard brokerage accounts can work fine. You want to be aware of things like estate tax, which is obviously what the uber rich are very well aware of. A lot of people aren't aware if you invest in U.S. equities and you're not a U.S. taxpayer, there's going to be hell to pay when you die. It's going to be a very unpleasant situation. So again, the holdco and trust structures can work well there. So that's kind of an initial idea of what the upper echelon is doing to invest. And I think obviously those strategies have become democratized as now things like offshore companies are more available. It's something that Nomad Capitalist helps people set up. If you have $1 million liquid or more, we'd be happy to talk to you. Not just about strategies for the structure, not just about opening bank accounts, but what else can you get from that? Is there a residence permit? Is there a citizenship that you can get? We've helped people move to dozens of tax-friendly countries. We've helped people open bank accounts in dozens of countries. We help people get dozens of different citizenships from all different angles. And I think they should all work together. I think citizenship is the biggest growth commodity for the uber wealthy. But those are the things that they're doing, and you can do it at a smaller scale as well if you follow some of those tips.